The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials down 100, Nasdaq off 13, S&P's off 7.5, gold contract flat 13.05. We get silver down 3 cents, $15.34. Light sweet crude down about 15 cents, $58.88. We'll get those API numbers out this morning.
Yeah, EIA, right?
EIA, thank you. Notes and bonds, 10-year note up 4 ticks, 122.28, 30-year up 12, 146.05. Bottom line, we're going to get the Fed at 2 o'clock, and we'll see where this baby's going to shake, rattle, and roll. King dollar up 79 ticks, trading 95.910. You get the euro at 113.57 to 1 U.S. dollar. The yen is trading out here at 111.5. The pound is at 131.79. We got Fed Day. And guess what?
What?
We get your birthday.
Oh, we do. Thank you.
Oh, happy birthday. It's a beautiful thing. That's right.
Party
and who else do we got? We got our man, Mr. Kevin Hinks from TD Ameritrade Think or Swim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand options, option strategies, futures, awesome program. If you happen to be on the West Coast, driving down that beautiful West Coast right now, remember, you can just go to YouTube, hit TFNN, subscribe. All the programs right there each and every day. Kevin Hinks, what's going on?
There he is.
What's happening, brother?
Nothing. How you guys doing?
We're
Doing well, man.
doing good, man. Yeah.
So today's guys. Today it's real simple, right? We're gonna sit around and pretty much wait until we get some type of look-see from the Fed. And what I think your listeners should be looking for is this. He's going to put, he's going to say patience again, right? He's probably going to lower the rate hikes from 2, which is what they have on the books right now, to 1.
Yes.
I don't think he'll go to 0. I don't think he wants to scare the market like that. He'll talk about a little bit lower GDP, and then he's going to talk about the balance sheet and what maybe he's going to stop or halt the balance sheet reduction for now. And then, I think the way this market pivots the rest of the day is really all about how he words it and how he puts that into wording.
Yeah, there's no doubt. You know what's wild, Kevin, is that Tommy and I were looking at this dot plot yesterday, and I'm looking at it right now, and the dot plot in my perception, it seems so much higher than the reality here. Do you know what I mean? It's
right.
Just like,
and I think you'll see a change in that today for sure.
Yeah, no, I can see that, man, because it's like, when I was just driving in, I'm saying to myself, hold it, am I that out of touch that I don't think that the rates are going to go up like 2 times for sure? It's like, hold it, we're already in March, okay? So, hey, we'll find out, and it's going to be intriguing, just as you said, like, what is he going to say in there that's going to move markets? We know he's going to move markets. So the real question is, like, what's going to be in there, right?
Right, and there are some new things that are in this. Remember, at 1 o'clock when they make the announcement, they also released their FOMC forecast. 2 o'clock Florida time, 1 o'clock Chicago time.
Yes.
Some of the things that the new new things that they discuss in this is the next change in the Fed funds rate and the expected Fed funds rate at the end of the next 2 years. So that's only as far as they're going to put the dot plot out, and there's some new things in there that people should be looking for. And besides that, the transparency that the Fed is now evolving to. Let's see if Jerome Powell does a little Janet Yellen and is very measured in his comments.
Yeah, I think you get that nailed, man, because I think that's what's going to happen.
Yeah.
Because it's almost got like we're all getting too comfortable. Do you know what I mean? It's like, okay, are you just going to tell us everything? Well,
yeah.
Bureaucracies don't do that.
Sure.
That's not the way.
He's going to tell us everything we need to hear in one way or another.
Exactly. And then, of course, we got Brexit happening. Not that that's affecting our...
No, it's not happening. No,
not that it's affecting our markets, but when you take a look at the currency situation, well, it's going to mean something. Well, we'll find out whether it's going to mean something.
Right, but this Brexit is officially a mess.
Yes.
And it's a mess that they don't seem to have a handle on right now, really. And I'm actually surprised that the currencies aren't moving more based on this. They're actually pretty muted.
They are.
Because what I can't understand is, okay, you're going to delay it, right, for like 3 months or. We've had like 3 years, so like I know motivation is a deadline, but that's
3 months is nothing. We've been talking about it for 6 months.
Did they not?
Was right around the corner.
Did they not know in December that 3 months was right around the corner? But
no,
sometimes,
totally.
I mean, they either want the Brexit or they don't want the Brexit, and they have to decide which it is. And because I still think, and it may come down to my heritage, but the problem with Brexit, I think, in a lot of ways, is Ireland.
Right.
Yes.
How they're going to figure out Ireland? How do you divide a country?
Well, that's what they're fighting about.
Right.
There's no doubt.
And I haven't heard a good solution. Just and that's from me being just a viewer from the side, let alone living there and being. I haven't. There's no.
And Tommy, common sense says there is no common sense solution.
Right. That's why I'm like, well, how are they going to do it, man? What's going to happen? That's in there. Right. Yeah.
Hey, so FedEx, that's taking a little heat this morning. Not that heavy. Yeah. I mean, it looks like it's already rejected lower price at it's 169. You're at 172. What's going to get intriguing there is like, okay, I'm trying to figure out is that, UPS has been much stronger than FedEx. Mm-hmm. There's no way that Amazon does not need both of them.
Right.
You know what I mean? So,
well, Tom, I think, and it looks like the comments made by their CEO was all about this is China related, this is weakness in Europe related, and this is a trade deal with China is what's and the tariffs and things like that are hurting their international business, and that's what it seems. It doesn't seem like this is a U.S. problem.
Yeah,
right. And when you look at FedEx and UPS folks, what ends up happening is that it almost seems like it's harder to build a ground game than the air game. And maybe what I'm saying there is that if Amazon's building an air game, FedEx is more of an air carrier than the ground carrier. Do you know what I'm saying?
Sure.
Because UPS, I mean, that's how they started, and FedEx started as the air carrier,
Well, it seems like what they're really having problem with in terms of Amazon and delivery in general is what they call the last mile.
Right.
Yeah. The final from that last place to your doorstep. Yeah. That's what everyone's trying to get a handle on, because that's where I think the expenses come in. Yeah. Everything else you can, do in bulk and volume, but, at the end of the day, it's one house that you're delivering to.
They get those warehouses perfect, right? But then they got like little ants coming out delivering it everywhere.
I don't even know how they do it. Yeah. I've been telling you, between that and the grocery business, man, I'm glad we're not in that business. And because when you talk about margins, it's like, really?
Amazon's going to have their whole team, man. Those trucks, they start that program. They'd give you $50,000 or $100,000 to start a small business for deliveries. That's what they're trying to focus on there. And I told you the other day, I got a picture with the package delivered, right? I mean, they're getting there. So, yeah.
Well, folks, bottom line, you get low volatility right now, but guess what? As we start approaching 2 o'clock, we'll see if, in fact, this insurance market wants to go up.
And we're in the 14s on the VIX, I think. We got a spike from 1237 to 1420. We're ready. It's coming.
There you go. Folks, right here, 45 minutes from now, outstanding program. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thanks so much, Kevin. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow down 106, Nasdaq off 14, S&P's off 8. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 103, Nasdaq off 17, S&P's off 8.5. Let's go to our man Mark in Bedford, Mass. Mark, what's going on, brother?
Hey, it's New Hampshire. We like no taxes here.
Bedford, New Hampshire, crossing that border.
I bought this TZA yesterday at 9:43. I bought in at 9:43. I took a sizable position, and I'm like, all right, where am I looking for to get out?
So the TZA, folks, is the direction, 300% inverse correlation to the Russell 2000 and the small cap index. You're trading right now. So if we just go over to the IWM for a second, because that's what it's going to be trading off of. What you'll see in the IWM, bottom line, is that weakest indice couldn't handle your downdraft from March 6th. That number was 156.08. So you know your first move. It's the weakest indice out here today. The first move is like, okay, you're talking about 150 or at 153.
Yeah.
You know, you get over to this TZA, and, you know, your first move up is, you know, you're talking 1053.
Okay.
We get volume, and, I mean, if this is a turn in the marketplace, there's nothing saying that thing can't go to $18, man.
And on Fed Day, man, we get a little volatility in the afternoon at least. So
Right.
that could go both ways, though, Mark. But
Yeah. You get this action there, man. I mean, the small caps are definitely the weakest indice, and they have been. And what they also did, folks, is that the small caps is what turned the S&P on the 6th, because the S&P didn't turn until the 7th, but the small caps were getting hammered on the 6th, and then all of a sudden the S&P turned on the 7th. So I think you get some action, man. I just ride it here for a couple of days.
That's what I'm thinking. I mean, I could put a trailing stop after the market closes every day, but I just keep my eye on it all day long, and I'll put the orders in to sell like half the position where you're telling me is just, you know, there's nothing wrong with taking half your position off, and that way you're guaranteed you're not going to lose.
Well, when you get, it's always nice to. It's always nice taking a profit, man.
never a wrong.
There's no doubt about that, man. Cooking, brother. Hey, you have a great one to say for Mark.
Thanks, Mark.
Let's go to John in Philly. What's going on, brother?
Good morning, Tom and Tommy. How are you folks?
Morning,
Doing great,
John.
man. Yourself?
Good, thank you. Tom, I wanted to ask you specifically about a couple of the big gold mining equities. Tom, you've discussed thoroughly, and I appreciate that, Barrick, which is Barrick Randgold now,
Yes.
and Newmont, which is Newmont Gold Corp, soon to be, with Newmont doing a joint venture with Barrick of its Nevada operations. But both those stocks, Barrick, ticker symbol GOLD, and Newmont stock, NEM, are pulling back. I'm wondering if you can answer or share your thoughts where you see support and the potential for a pullback bottom to occur in both those names, please.
Well, okay, so let's start with Newmont. Low for the year is 29, high's 41. We're at 32.73, and you can see, Newmont has that high volume spike at 32.46. So that's your first number. Now, when you take this and we put that on a weekly, it's like, okay, man, if you go by that number, then you really do have game down to $30.67, because that's sticking out like a sore thumb also, and that's quite a hit, man. Now, but that's a reality there. Inside Barrick, we take a look at Barrick, and Barrick's a better looking stock all around. You're talking Barrick 12.22.
It's a low from March 1st, yeah.
Yeah.
Or the week of March 1st.
And what has happened, John, is this, is that if we go look at this gold contract, gold's holding up, folks, but gold does need more volume to get through this March, I think it's March 1st. I'll pull it up. That March 1st?
Yes.
Yeah. It needs more volume to get through that March 1st level, because that's quite a supply line. Because the supply line, folks, isn't just from March 1st. The way that you do this is that you take this over and you say, okay, from January 25th, we traded over that level, going all the way over to March 1st. So that's the supply line we have to get rid of.
Yeah.
And it hasn't had the type of, volume that you're going to need. Well, it did the first time. It did on 13th and 14th. That was cool.
Yes.
It's going sideways. We need a few more days like that.
Sure.
And you know what? I don't think the aspect of gold going higher, John, or the equities going higher has changed. But I haven't changed my attitude on that at all. But we know this is a patience game, man. You know what I mean? That's what I think we're in.
Yeah, absolutely. Your comments on the mining equities and what price of gold is doing is topical, and that's why I'm asking on this weakness, looking for viable spots on NEM and Barrick Randgold.
So
in parting, Tommy, I'm just going to mention, and I'll sign off, thanks for your work, Franco-Nevada, FNV,
yeah, they came out with numbers last night. Yeah.
Numbers last night.
Oh, this is trouble.
And what I'll share with you, I just want to make this point. Earnings were weak, and that's not a huge surprise. The streaming ounces that were booked in the last quarter were down, and that's not a big surprise. Going ahead, Tommy, I just have to share this with you. Franco has got this massively large streaming investment commitment with Canadian-based First Quantum that's building out a huge copper, gold, silver mine down in Panama.
Okay.
And that mine is just starting to ramp up. And looking forward, First Quantum with its copper and Franco-Nevada getting the streamed results out of the gold and silver coming out as byproducts of that ramping up mine, that should give good volume results for Franco-Nevada look in the next couple of years. And so I want to be all over this thing where I find low-risk buys. What do you see there, please, and I'll hang up. Thanks so much.
What you got here, now this is a problem, folks, okay? Franco-Nevada is a great indication of where the price of gold is going.
Okay.
And this is a big problem.
Yeah.
I reported these numbers when they came out last night, and the stock wasn't moving, but I said most times these gold stocks don't move after the close because they're just too small.
Yes.
Not like the tech stocks.
Yeah.
This is a problem, man. This is saying, number one, that Franco-Nevada is going to get down to 67. What it's also telling me, though, that this Fed deal this afternoon probably is going to hit gold. That's, you got to be really careful when any of these streaming stocks go south. Now, Royal Gold is the strongest, and that's, it's only 41,000 shares. That's nothing. So, we'll see whether we get some divergence. If we go through the day and you don't have bigger numbers on Royal Gold, because you're coming into 480, then that's going to be just a one-time off for their earning numbers. Do you know what I mean? But it's something to keep your eye on. Oil.
Yeah. So as we come into the break, we got oil trading higher, 59.18, and to pull over, we're going to get those numbers in 3 minutes. I believe we're looking for, whether it's the whisper or the survey, an increase of about 1,500,000. We'll find out when we get back.
Stay right there, folks. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Well, this is a number that is like off the market, like in a huge way. They're expecting 66,000 barrels.
Yep, so there was your gain, right?
A gain.
Now that's the Bloomberg user. There's going to be a median estimate, whatever it is. decline. 10 million barrels, we'll call it. We'll round up. 10 million barrels, make it nice and easy. 9.59 crude oil inventories. And I haven't seen the chart. I wanted to see it with everybody at the same time.
If this isn't up a buck,
right? Where are we
oil's
going?
going to go hell in a handbag.
Not quite, but you definitely got to pop. So we're trading at 59.18, excuse me, coming into that number. We got to pop 50, 60 cents. And in the first minute, not that bad, as in you could see this accelerate. You could have got a dollar pop, like you're saying on that news. But guess what? We got from 59.13 up to 59.75. So 62 cents in the span of 30 seconds a minute. Nothing to shake your head at. We weren't able to pull up the trading, but that type of a miss, man. You're making a volatility trade today. Right. You're probably making money. We'd still have to see where this expires.
And
but
you know what's going on here, folks? This is going to be really cool watching this because it got stopped in its tracks at $60 the other day. And if this thing cannot blow by 60, there's a problem.
I think you're talking about yesterday, right?
Yeah,
That's That's it.
I mean,
right? No, I kept saying, right? 7 in the morning, we were up there, 15 pennies away from 60 bucks.
Totally, man. And that would mean that you got a seller just laying there. Like, I'll give you all you want, because that's a monster miss, man.
Oh,
and the gasoline is a monster miss.
Yes, yeah. We'll go back to the full numbers, but we're almost at the highs. Again, only been 2 minutes since those numbers. We'll see where we shake out, and there's your full breakdown. Yeah, so the median analyst estimate was even higher, right? You had the Bloomberg user survey, only an increase of 66. Let me scroll this down. But you had a median analyst estimate of an increase of 1.75. You got a decline of 9.589 million barrels. Cushing crude declining 468. There's the big number, I'm sure. PADD 3 crude declining 8.6 million barrels. Gasoline, a miss as well, minus 4.5 million versus an estimate of minus 2.5. Distillates, minus 4.1. Estimate was a decline of 1.5. Across the board, man, across the board. Crude oil imports up 186,000, and quite a number, man, quite a number. And as you would expect, the price is climbing. And pulling it back for one more check before we jump around, kind of hanging at that level. Will be interesting to see whether we get up to that 60, because we have not seen 60, I believe, in, see, this doesn't go back because I'm looking at the contract, but you're going back 6-7 months, I believe, the last time that we saw $60 oil. And we made it all the way down to, what was it, 42, 43?
Yeah, and what that 60 number is, we'll bring this up.
One sec, pull this over.
What that 60 number is that's when oil went down $5 that day. So it's like,
$5, yeah. No, I know,
you get a seller.
I remember those days.
That is just sitting there.
Oh, you could have more than one seller.
Well, they're probably producers. They're probably producers. There's the number right there. It's not someone trading it. It's, you're pumping oil out and say, okay, I'm happy with $60.
Sure.
Hey, I'll say
they better be happy with $60. They were just getting.
You can write it down at 42.
43. 43 on the dot.
Right.
Perfect. Yeah. And then you go from 76 in October of 18.
Yeah.
Down to 43 and back up right in the middle of that range.
Pretty intense, man.
What is the, what is the Fibonacci? I want to see where we're at now from this decline.
Totally.
Because we're at
50% appreciation.
Right on the dot, 60. There we go.
Yeah. And you're talking about, you get two different things here. You're talking about that large downdraft at the 50, and you're talking about it can't break topside. So that's going to be a good number looking at all day long.
How about the XLE? How those energy stocks on that? Quite a little pop.
Didn't move it. 16 cents. It's not moving either.
Yeah, who knows? It could have been down before that number came out.
Yeah, with that kind of miss, you should be up to the moon.
Yeah.
That's a lot of. The thing that's amazing that when you see that kind of miss, it's like, okay, imagine if you're a fundamentalist, you're inside there looking like, okay, what did they not pick up?
Yes.
Right? Someone didn't pick up something.
And even as we say it, pulling back a bit from those highs. So again, we're trading at 59.15, we'll call it, coming into those news, only 40 cents higher on quite a miss.
Totally.
Yeah.
So let's go take a look at Boeing. So this is a monster news deal, folks.
Yeah.
And
Can we go into the news story? Why don't you just go, because for people who haven't heard it, and if you're in the market, if you're reading about this, you'll see the headlines. So you'll see it here.
It's hard to even comprehend.
It is. So now this refers to the crash a year ago, not the one that just happened.
7 months ago.
Yeah. And so as that crew fought to control their diving plane.
This is the day before.
This is the day before.
So this is the exact same plane.
Yes.
Exact same airline, Lion crew.
And it's the next to last flight, right? Of this specific plane. We're not talking about the model, the specific plane. I had to, even in my head, I was like, wait, are you talking about the same exact plane? Yes, the same exact plane.
Same exact plane.
And so the crew basically had the similar thing happened. They were fortunate that there was an off-duty pilot, as they have happened, right? They just put him in the cockpit.
They were in the jump seat.
Yep, exactly. An off-duty pilot who happened to be riding in the cockpit. That extra pilot correctly diagnosed the problem and told the crew how to disable a malfunctioning flight control system and save the plane, according to 2 people familiar with Indonesia's investigation. The very next day, under command of a different crew, facing what investigators said was an identical malfunction, the jetliner crash with 189 people. I mean, so sad, man, just horrible. I can't imagine for the poor people who knew somebody or had family on this plane to hear something like that.
They're going to be totally flipped out. Well,
of course.
I think where the problem is going to be, too, that bottom line, folks, when they had that investigation, and they didn't even put that in that investigation.
Yes, so
that's a huge problem.
The presence of a third pilot in the cockpit wasn't contained in the Indonesia's National Transportation Safety Committee's November 28th report on the crash and hasn't previously been reported. Obviously, a pretty substantial piece of evidence within that. And yeah, the so-called deadhead pilot, which they call in those seats, on an earlier flight from Bali to Jakarta, told the crew to cut power to the motor, driving the nose down, and part of a checklist that all pilots are required to memorize. And I was just saying to you as we came in here, you know, he isn't responsible for the plane, right?
Right.
He's supposed to just be a passenger, for all intents and purposes. So maybe that allowed him to just have a little bit clearer thought, where he didn't have to be so worried about every detail, where he could abstractly think about how something so terrible could be going wrong. Whereas when you are the sole person in charge, maybe there's some fear, maybe everything, right? There's there's
no doubt.
Pretty remarkable, and even more remarkable that you have Boeing trading positive today, as that story hit like last night, basically.
Pretty amazing.
Yeah.
It's just that is like about as sad as you can get.
Yeah. Pretty remarkable. And then, you know, you have that happening so that was a November 28th report. Okay, so I don't know when it happened, probably a couple before that. But we're in March right now, and that accident just happened was in February. As in plenty of time, even, you know, if that tragedy was unavoidable, maybe the next one was.
Oh, yeah, for sure.
Let alone that one seems like it was unavoidable. Excuse me, avoidable, because the same thing happened. I mean, how is that not... Anyway.
No, it's heavy, man. I mean, you know, you get the American Pilots Union, the Southwest Pilots Union, they're basically, even when the first one went down, they're saying that flat out that the information inside that Boeing had given to the pilots wasn't there.
The manuals had not been updated at all.
Right. You know, and they're saying, okay, what else is out there? I mean, is there something else out here that we better know about these computer systems?
Yeah.
You know, pretty intense. Dow Industrials right now down 101. Nasdaq off 16. S&P's off 8.5. Let's look at that oil market.
Where are we at?
Yeah.
59.50.
Look at that.
Doesn't want $60 oil just yet. We'll see what happens.
Yeah. That's going south, man.
Oh, boy.
Stay right there. Tommy and I come right back. If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is down 91, Nasdaq off 14, S&P's off 8.5. Let's go over to our man, Mr. Teddy Kegstad, as we do each and every Wednesday. And talk about, we just, you just are in the right spot. We have you in the right spot. It's Fed Day.
That's right.
It seems like every time that you're on, we got to know what's going on with these currencies. And, folks, you can reach Teddy every trading day at forex-trading-unlocked.com. Teddy Cakestack, what's happening, brother?
Morning, guys.
Morning, Teddy.
Hey, we're sitting in the same spot, man.
It's going to be pretty quiet, I think, for most of the day today.
I know, man. We've been sitting in this spot since October 24th.
Right? Pretty much. For a lot of these markets, they've been in a wide range trade, for sure.
Yeah.
So, but today's going to be quiet until the Fed's done. We have a dovish Fed with really no interest for anybody right now unless they say something, to the opposite.
Yes. Yes. Now, what do you think about the aspect, I guess 2 nights ago when, the House of Commons speaker came out. I happened to be on the air then. I'm saying to myself, man, we should get some volatility tonight, and the UK and the euro. But guess what? It flatlined. It's like, wow. I mean, the market knowing that there's going to be zero, well, you can say there's going to be chaos, meaning there's nothing happening, but it seems like the currency markets are just like sitting there like, okay, talk to me, Crazy.
Well, I think that, like you said, right now they are kind of just like not really absorbing anything. It seems like it's very lackluster as far as the information reaction is, except for the pound. The pound dollar right now is retreating right now. It's kind of a corrective move, and I really see that because, yesterday with what they, May was pushing for the June 30th Brexit extension and what have you. So we know that there's going to be 3 more months of this, deliberating on what's going on and what isn't going to happen. So the pound, I think, now has pushed that upper end of its range last week, and now it's going to settle back into this wide range trade, probably from 132 down to the 129 area for the next, basically 3 months. So that's the dollar right now is kind of neutral because of the Fed meeting, but the pound dollar, it's getting hit this morning because of this news to put it back in that range, So the dollar's getting a little strength today on that, but I think it's only a little, that's the only really news reactionary trade going into the Fed, except for the U.S. dollar Swiss. And that's the one thing that's seeing that under parity today. And actually, the pound already started bouncing back a little bit, the pound dollar, since the break this morning. But the Swiss hasn't. That's actually still hammering the lows, and it's about, I think, about 25 cents below parity right now. So, which is not that significant, except for the fact that we've been talking about parity being the dividing line for the dollar. So, and I think
cool,
that's
man.
they can stay below that, guys, and we have an indication of what's going to happen with the dollar over the next couple of weeks.
Now, okay, so can we go over this again? Because I got this up now, Teddy, right? And I can see that, it got all the way up to this 1.01, and that was testing the 1.01 all the way back to November, and now it's getting deeper into it. So when the franc comes down, right?
Yes.
The relationship in the dollar is getting stronger or weaker? Dollar.
Right now, the dollar is getting weaker.
I got it. Okay, cool. Okay.
It's getting weaker against the Swiss.
I got it.
So,
okay.
And the thing is, the irony is that you also look at the euro, which on a daily basis, you would think of a move like, if you look at how the volatility today in the Swiss,
yes,
their range is pretty strong. And usually they're less than the euro US dollar is. Today, the euro US dollar, it's positive with not much of a range, and usually they kind of go in tandem when you have new lows or new highs being made in one of these markets.
Okay.
So that's where I think, that's what I was saying, today that parity thing is a big indication for what the dollar is going to do.
It is.
Okay.
That's pretty cool, man. Yeah, I like that. That's
because the euro US dollar trade has been a very, it's been a creeping bull for the past 3-4 days.
Yes.
If you looked at it at different times during the day,
right,
you could have every reason to buy or sell it on the intraday, and I guarantee you any intraday trader probably got chopped up over the last few sessions.
Right.
I would think.
And that's where,
because every time you think it's going to be a bull, it starts to just edge its way down, and it's chewing up all the weak stops. It's a little spike, and then all of a sudden, boom, it's back into where it needs to go. And then the same would be, well, obviously it's been a bullish trade like that. So it's been a buy dip market, but it's a hard market to buy dips on. You just got to kind of get long and hang on.
Right, and what that's all about, folks, is that the trend is your friend, and that's when if you're on the right side of the trend, you think you're a genius in the trading business. So funny, Teddy, is that it's so true though, right? That when you go on a streak, you're realizing kind of what you just said, that even a small move, well, you're on the right side of the trend. You're losing, and all of a sudden, end of the day, oh, you won. Losing, you won. And it's. I'm making it more simple than it is, but it really is. It's like, okay, if the trend is up.
You are correct, 100% correct. That simplicity is the ultimate truth. The trend is your friend. Trade the action, not the reaction. The reaction is where you get chopped up. That's where all the emotion is.
Yeah, interesting, man.
Yeah.
I'm telling you. And, we'll see. I mean, Tommy and I were looking at that dot plot earlier, and the dot plot was like, what ended up happening, we were looking at it yesterday, and I had to go look it up last night to really understand what it is. And all those little dots, folks, are the governors that have voting power. That's where they think it's going.
Yes.
And it's way above where the consensus is right now.
Like we're saying with Kevin Hinks, right? That's December.
Yeah.
Lots changed since December 19th or wherever that last plot came from.
Right.
So that's going to change for sure.
Oh, that's how that works. I got it. Okay,
I believe
so every quarter
I believe so.
Okay.
That's what I saw on that line.
Let's see.
Even, because I was doing the same thing. And so, see, meeting day 12/19, and they have it up here. Projections for meeting data 12/19/18.
Okay, so that'll change.
I mean, that's before the markets collapsed on Christmas Eve, right? I mean, what's the S&P up 20% almost since that level?
Yeah.
I mean, remarkable.
Right.
Yeah.
Right.
But look at that disparity of the dots
I know,
too.
man.
So even, I mean, it's just there might be a median take, right? Or but man, they got 3 or 4 governors on either side. Yeah.
Pretty wild, man. We'll see. I mean, they'll come out there, and it doesn't seem, that. I mean, we don't have inflation out here, so it's like, okay, how dovish are they going to get? I mean, that's I think kind of where we're.
They're going to stay that way till the fall.
Okay, that makes sense. My perception is that they're done, and I see that our economy's still going good. I mean, but the reality is that the Tafts are hurting the Midwest beyond belief. I mean, those farmers, and there's not as many farmers as there used to be, but let me tell you something, folks. There's plenty of communities out there that are getting hurt. If you go look at any of those soybeans, wheat, corn, they're all down dramatically. So that's a problem child.
But don't you think there might be a little shift in that, guys, over the next couple months with the China deal?
If they get it done, yeah.
They're talking right now in Chicago that if this deal goes the way it's going to go, that the farm demand in the Midwest may be actually up threefold to China.
That'd be great.
And that's a whole topic that no one was even bringing to the table a year ago. I mean, this is something
not
that
even
is
close.
actually a possible reality right now.
That's a big number, man. That's a big number.
Yeah,
Listen,
pretty
folks,
cool.
you can
Right?
Yeah, I'm gonna go be a farmer, man. You can reach Teddy every trading day. Forex-trading-unlock.com. Teddy, you have a great week, safe week. We look forward to speaking next Wednesday.
You too, guys. Thanks for everything.
Thanks, Teddy.
man. Stay right there, folks. Tommy and I are coming right back. We have the Dow down 72, Nasdaq off 5, S&P's off 6.5. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 62, Nasdaq off 4, S&P's down 5, and oil.
Today would not have been the day to make a volatility trade, it turns out. Probably, we'll see, the day is young, anything could happen, but pretty remarkable, man. You're trading at 59.45, only about 30 pennies from where we were prior to a almost 11, 12, 10 million barrel miss to the downside in oil.
Yeah. You know what's so cool, folks? I love the idea when you have something like this, because to me that tells you more about the market.
Sure.
You know, that, I mean,
I always like to think about what happens if it's a reverse if this is what it looks like when there's a 10 million barrel to the miss on the downside.
Totally.
What would have happened if there was a 12 million surplus barrel report of the inventories, right?
Seriously.
You might have seen crude drop $2.
Yeah.
You might have seen it drop $5 like it did going back all the way to that bar that we're going into from October, November, whenever it was. But nonetheless, pretty remarkable. We'll see where it shakes out. $59.51 in the price of that May crude contract.
They're happy right there with that price.
How about FedEx? Let's check in FedEx one more time. I want to see how they're. VIX too, 1404, little spike from yesterday, and FDX for FedEx trading down 5%, and Boeing positive for the day. Why not? Up 1.7%.
Yeah. Hey, it's going to be wild. You know, there's a news story out there with Ford. It's not that it's hitting it, but this is a pretty intense story. So Ford's down 18 cents, and what it is that you get 3,000 Ford Explorer owners of 2017 models that are saying that they're getting sick. And
3,000. Has to do with basically the exhaust fumes somehow getting into the car. That's a big number in that article from today. And
I can't picture you get 3,000 people complaining. How many more people are out there that they don't even know they're getting sick?
Right.
Pretty wild.
Yeah.
Stay right there, folks. We have Fast Market coming up next, and we get our man, Mr. Basil Chapman. Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow! Go get them, folks.